Hi everyone, you have tuned into Kotak Securities Weekly Fundamental Podcast. This is Rini Mehta. Last week, Sensex and Nifty both gained around 2.8%. Equities continued the past week's recovery trend on increasing hopes of peaking inflation as commodity prices continued to fall sharply. Now the government's decision to levy duties on the production of crude oil as well as on exports of ATF, diesel and gasoline impacted the stock prices of the oil and gas and consumable fuel sector. FMCG, realty and banks were the top gainers, while oil and gas and consumable fuels lost the most. Now if you see within the Nifty Index, ONGC, HDFC Life, IOC lost the most, while Hindustan Unilever, Britannia, L&T and Titan gained the most. Now on the economy front, GST collections for May came in at 1.44 trillion rupees as against 1.41 trillion rupees in April. Manufacturing PMI declined from 54.6 in May to 53.9 in June, while services PMI increased from 58.9 in May to 59.2 in June. Now if we see FPI trend, that is foreign flows, FPI outflows stood at 406 million US dollars over the past 5 trading sessions, while DIIs, that is domestic investors, bought 707 million US dollars over the same period. Now FIIs continue to be the net sellers till date in the month of July to the tune of rupees 4,543 crores. Inflation would be a key driver to watch out in the near term. Higher inflation coupled with high yield gap is impacting market valuation and would be a key headwind in the near term as well. Hence, we expect FPI flows to remain volatile in the emerging markets. Now coming to the top stock picks, our pick of the week is Tech Mahindra with a buy rating and target of rupees 1300. Tech Mahindra's annual report highlights improvement in margins of certain acquired entities such as Pininfarina that were a drag in the earlier year. Acquired entities post pivot in acquisition strategy in 2017 have done alright, especially Bond Group. Margins had two interesting elements now. One is extremely high subcontractor costs that were a drag, and second is tailwinds from aggressive rationalization of costs and low bad debt provisions, partially unsustainable. Free cash flow generation was impacted by aggressive 10 acquisitions in FY22 that entailed cash outflow of around rupees 46 billion. Our another pick is Axis Bank with buy rating and target of rupees 960. We are quite confident based on our readings of the annual report that Axis Bank is getting stronger with each passing year. The corporate portfolio is nearing peak profitability while retail is showing improvement in asset quality. However, costs have been higher as investments to strengthen the franchisee. Investments to strengthen the franchise have accelerated in FY22. We see this cost ratio improvement along with the progress of the recent announcement on Citi's book as key drivers for re-rating. So guys, that's all for today. See you again next week. Signing off.